The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman. My pleasure to be here on this ninth day of May, and fascinating markets. When we spoke yesterday, the Dow was down, the S&P was down. We basically, as I said to subscribers to my opening call in my newsletter this morning, I said it was like a 4-in-1 session. There have been different occasions where we've had 2-in-1 sessions, sometimes a 3. Yesterday was really a 4-in-1 session. It was the early morning attempt to rally, and then we just fizzled out, and it was weak. Even as the news came out, it was weak. But then there was a sudden spiral to the upside. Remember, the Dow actually went up 45, 50, 57 points. And then there was a much sharper decline. Unfortunately, that decline took us out of our Dow long positions. One of them made a really nice profit. Smaller positions took a less than 1% loss, like a 0.5% loss. But it made it real tough because I wanted to be in. So we're back in. But the best risk reward was on Friday. And now we have to see what happens to the upside. There are a couple of things that are really exciting. If you're looking at the E-mini, look, it's up 9. It's walking the 9-period moving average. This is the 4th day in a row that it's gone above the 9 EMA at 2662 support. It's at 2679, the daily. The MACD's improving. The stochastic's improving. Unbalanced volume is really high, meaning that the total volume to the upside has been good. And it's added to the previous day, and that's good. The arch formation that goes from a lowercase h to a lowercase m in the weekly chart is unfolding. There's a little room to the upside still. 120-minute chart has made a cup formation. It's just been incredible. The alternation between arch and cup and arch and cup and just over. It's like a sine wave that just, you know what it is. As I'm saying this, I'm reminded it's like a little kid's game where you've got to, I don't remember the name of the game, where you run and then the one person at the end stops and then all the others continue, and because of the momentum, people fall because you've got a decrease or an increase in the velocity of the movement, and you just wiggle around and it just keeps going like that. And that's exactly what we've got here. It makes it real easy to look at parameters, makes it real difficult to have shorter-term trades. If you want to put stops in, which I have, I'm prepared to take small losses because when we have big gains, we have some really big gains, and it just eliminates all those little frustrating, niggly losses that we take. Now, I look at the cup formation that's forming now in the E-mini, and it says, well, you've gone, the high that was made right there on the 30th of April at 2682.25 in the June E-mini, the March E-mini, March, April, May, June E-mini, 2682.25. Today's high is 2684.50. So what have we done? We've gone 2 points above. So we've started another gray leg B to the upside. The action to follow will be if there is a trade in the 2671 area, 2679 to 2681 area, just has to pop up there. That'll be really good action and suggest that the high of 2718 back on the 22nd or 23rd, what was that? The 18th of April is its game. It becomes a magnet to the upside. If there's a failure and we start to break under 2672 to 2669, anytime between today and tomorrow, I just, hey, we're just going sideways, trading band, narrow range. I think we've got more of an upside action. Let me show you why. The Dow, INDU, trading right now, it was up 100 and it was down. Now it's up 33. This candle needs to be at 24,392. It needs not just to take out the high of the 7th, of 24,479, which would make it a gray leg B. It really needs to take out the 24,498 high of the 30th of April, and that will establish that it's making a target of 24,000. Wow, that's a lot. 858? 500 points, 400 points. Let's just go one step at a time. First thing is to get to the 24,490s. Okay, it's 100 points from here. Key support, 9-period moving average, 24,265. The MACD and the stochastic and the weekly chart need a lot of work. The daily chart is improving a lot. S&P up 9.32. It has taken out, so close I need to check it. 2683.35, 2683.26 hasn't yet taken it out. It needs to take out by 2 o'clock this afternoon. It must 2 o'clock to 2, 3 o'clock. It must be going to the 2684s, and that'll be very nice action. If it pulls back, 2672 will be a key daily support. 9-period moving average is way down 2663s. I really wanted to get to the Qs. Look, the Qs, this is covered up so you can't see it, but the Qs today are tackling the peak D high it was made 3 days ago of 166.78. High today is 166.68, needs another 11 cents. It should get there. The MACD is good. Stochastic's now at 85%. That's really nice. And if it does that, if it's able, in fact, to rally and get to 167.01 by tomorrow, I'd like it tomorrow. It could be Friday, but I'd like it tomorrow. The weekly chart has started a gray leg B. That's going to be really important both for the weekly and for the monthly. All right, now we get to the IWM, which, as we've said before, is a stronger index, but it hasn't really shown sign, up until now, it hasn't shown a sign of breaking out to be able to tackle the 160.62 all-time high, made back in, let me just give you the exact date, peak in the weekly, on the week of the 26th of January, and it has gone to, look, peak C was made on the 18th in the daily chart of April at 158.38. Today's high is 158.44. It has gone to a leg D, just as the Q just snuck to a leg D. So we've got a leg that made a peak D, and now the Qs need to start leg E. This is a doji leg D. MACD is good. Stochastic's improving a lot at 75%. I'd like it over 80%. The IWM is acting pretty darn well. All right, now we're going to get to gold. Everyone's waiting here. Gold is up 0.4 at 13.9.2, and it's really struggling. Now, this is the big deal. So gold needs to get, it isn't just 13.27. It needs to get to 13.35 for me to say, hey, this is a very big change of trend. Now the daily is improving enough to help the weekly chart. That's a lot to ask. It's another 20 points or so. That's a lot to ask. We'll do this when we get back. Basil Chapman, Market Conditions Hour. Dow is up 34, S&P is up 10. I'll be back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. Are you an options trader that's looking for that extra edge when placing trades? David White will be hosting a webinar on May 16th, which is the Wednesday leading up to Options Expiration Friday in May, where he'll discuss in depth the methodology he uses for trading options near expiration, including swing trading setups and expiration day trading scenarios. Subscribers to each of Dave's newsletters, Path of Least Resistance and the Technology Insider, gain access to this 60-minute webinar, which will be archived if you cannot attend live. Dave has had some great option trades recently for his subscribers. See for yourself the trading methodology he uses when trading options by signing up today for either of his newsletters, and we'll see you Wednesday, May 16th at 5 p.m. for option trading near expiration, analyzing swing trades and expiration day scenarios. For all the details and to sign up today, visit the front page of TFNN.com.
Basil takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. So we were looking at gold, and I said that gold really needs to have a pretty decent, about a 20-point move, and then I'm going to be really impressed if it can hold. Silver's had a nicer move. Silver's in leg C, gray leg C. Let me change the color. Yes, so then I'll say gray. It means gray. The gray legs B, still within this trading band, holding on very nicely to the 1620 support, trading at 1657 right now. I'm going to say the same things I've been saying. It needs to get into the very high 16s and hold it. It really needs to get to 1720, and then you have to say fabulous action. Until then, it's just chop, chop, chop. I think it's trying to build some strength, and now we can go to the culprit. The provocateur, and that is the dollar. It's down a penny at 93.07. This is really interesting. You see the way the MACD crossed positive and the fast-moving average, that's called the 9-period differential, I call it the green line, the fast-moving average, is way above the 9-period, above the slow-moving average, the red one. This is the look-back period of 26 bars. And what's really important is that the histogram is just barely starting to contract. This dollar this is serious stuff. It is impacting the other currencies, and it's doing it against the backdrop of crude oil having a huge rally. And there were periods where you could actually monitor it. Crude oil bounces, dollar comes down, crude oil pulls back, dollar goes up. It's not doing that. They're working in parallel motion. To me, that is really important. It's telling me that this is not just a short-term trade. It's more the intermediate-term trade that we've been anticipating for a while. One of the reasons why we've been long since $90. It's at 93.07, having hit 93.42 today. I've got this as a doji candle, potential leg F, but there are a whole bunch of things in the Chapman Wave methodology. For those of you who are subscribers, you'll know that I've been showing CLR as an example of a particular technique, and CLR is Continental Resources. I spoke about this incredibly long up channel, and when it finally breaks, sometimes you slide right out, and then you have to do some retesting. I spoke about this having every indication based on the MACD's chart formation, Continental Resources trading at 68.57 up 2.35, that was a peak G and that we should pull back. There was a chance of an alternate count because that's how I learned what the instant restart over there can imply. If there's an instant restart, you go to G/C, the MACD is still strong, there's a chance you can then finally get that missing D. And that's where other things can happen. And lo and behold, it pulls back from 66.90 down to 62.27 on the 3rd of May in one day, from a high, all-time high, to a pretty sharp 10-day pullback, wipes out 10 days worth of up move. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Actually 12 days. And then, because it's the first big drop, there's still a magnet of the upside momentum. It pops right back up. And it had that yesterday, failed to make a new high, and today it went to that leg D. Is this a D that's going to now turn down? This is what we have to watch. This is what it was a study piece I gave to my subscribers. I love to add these study pieces because the study piece means that you're learning a technique. You're not just paying for a subscription. Every day you're seeing exactly how to do it. For instance, we had to stop on one particular new position that we wanted, small position I was going to add to it on pullbacks. I just did not, I was a little nervous, so I kept the 4-point stop on $144 stock at 1%. It took, sorry, 2%, under a 2% risk. It took it out, even though I was hoping it wouldn't. It just took it out. Now it's bouncing nicely. Hey, it happens. At the same time, using the same Chapman wave methodology technique, we bought a stock today for $3.38 because I love to mix very low price with a higher price. And we were lucky it went to $3.49. Huge move to the upside. Intraday, anything can happen. I'm just telling you that you got to do what you got to do. And in this environment, I'm prepared to take tiny losses. I just don't want the risk. What if if I made the stop bigger, it closed at the low of the day today, and then gapped down tomorrow? And then I'm stuck because now I can't add to the positions. I just want a small loss because eventually when we get this right, usually it's working well. So we've got other ones to make it up. So this is a chart that I wanted to show. Now I'm going to go back to what we were looking at, and that's the dollar. And the question is the dollar doing the same thing? A beautiful up channel, not as long as CLR, but a very long one. And the MACD is good. Stochastic is improving. In the other case, the MACD in the weekly chart is fabulous. Here, the MACD is just improving. Stochastic is good at 80%. Leg C, gray leg C. Actually, this is a buy mode. This is a full blue leg C to the upside. I believe it's going to go to D, and it will go to 94.22 at some point in the dollar. But in the meantime, we'll see how it consolidates. And if you look at the EUR-USD, this is all to do with gold. Looking at it's trying to make a little doji low, but the flat stochastic is 6.70. Says, yeah, you could pop up. So you're going to need a lot of work to get to the teens from the 6.70. I think that this is telling us that the euro is not going to do very much over the next couple of weeks. It might bounce, but not all that much. And if you look at the USD JPY, and this is the yen, dollar-yen currency pair, look at that nice bounce. The rebound hasn't made a new recovery high after the doji peak E that was made on the 2nd of May at 110.02. It's at 109.69, really strong candle. Gray leg B, if it goes above 110.028, it starts F/maybe B. We'll see. But the weekly chart is really improving a lot. This is moving concurrently with the dollar. I like it. High level consolidation so far. Now let's go to crude oil. Hey, crude, anybody say crude oil? Leg E. Up channel, just pierced the resistance. Inside track, just pierced the resistance. And the MACD is good. Stochastic is at 85%. That's good. Weekly chart is good. I'd say if we can get to the 72 area, maybe 73, I have to just change my mind and say, you know what? Crude oil is in play. It is serious stuff. Any consolidation after this Chapman wave stalk leg formation, peak D pullback into the body with a new recovery high has to be called impressive. The MACD's it's already strong. It's up 1.23. A good displacement of that 9-period differential above the slow moving average, and the stochastic is good, on balance volume is running. So far, this is very nice action in crude oil. Now we need to look at TLT. This is bonds. Pulls back 49 cents at 118.20. Look at the 30-year yield, how close it's getting at 31.52 to the 32.19, 32.21 previous highs, peak C1, C2. There's really a good chance that we're going to go to a leg D at 32.22 in the weekly chart of the 30-year yield, the TYX. Look how strong the 10-year TNX is. Look how strong the FVX is, the 5-year T-note yield, almost at its recent high 3 weeks ago of 28.52. It's at 28.36. Just an eye blink away from an all-time, not an all-time high, but a record high in this particular phase. I'll be right back. Now the Dow's up 81. We'll be back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi folks, we're back, and just a real quick thing here. The E-mini 2-minute charts, leg C on the upside, leg D in the 5-minute chart, and only a leg B in the 10-minute chart. Key support now is at 26.83 to 26.80. On a short-term basis, and it's trading at 26.85. Nice big spike to the upside here. Let's get back to our story. So we're looking at the yields. See the yields holding very nicely here. It really is saying that at this particular point, yields and the dollar are the two aspects of the market that have had a different effect than many, many people were thinking it would. on breakouts, and so far everything is working quite nicely. What's most important is that within the TBT, here we go, the TBT, there's a chance now that this move up well, it's going to take a little while to do. TBT's up 34 cents to 38.33. That was a deep pullback from that peak B that was made in the inverse of the TLT on the 25th of is that April? Yep, April at 39.29. So here we are at 38.33. Got a point to go, and that could be having inside peak A, B, overlapping wave. We'll see what happens, but it has to get to 39.30 to get to a leg C. I think it's going to happen based on the weekly chart, monthly chart. It's in the middle of everything, but so far TBT is showing residual strength, and we'll see what happens if it's able by today's Wednesday. Today's Wednesday, 38.55 to 38.75 is really the level that it needs to break above and close above on a daily basis to show it's going even. Dow's up 108. Nice. I don't know what it was. Nice move. Oh, S&P's up 17. Oh, very nice. So now let's get back to our story. We've done that. We've done that. Did I do crude oil, or did I say crude oil and then I went straight to CLR? Yep, I went straight to. So the crude oil monthly is in leg D. The 120-minute chart is in leg D. The weekly chart is in leg D. Wow, so many Ds. We had a whole webinar on PDs, you remember? For my Chapman wave methodology. And it's in leg E in the daily chart, but it's the MACD that's good in the stochastic at 85% that is saying that there should be 69.31 support at the 9-period moving average. A close below 67.50 is needed. No, I'm going to make it even more. A close below 67 is needed to even get a hint of a sell signal, let alone a sell mode in the daily chart. All right, I think I've covered just about everything. All right, here we go. Questions. So Bob sent me an email early this morning. The question was Walmart. What exactly was the question? Let me just go to it. It was a very good question. Where's? Radio show. Please discuss Walmart pre-market drop. Basil, yes. This originally went to another show first. Okay, Bob, you can be unfaithful. I'll remember that. No, seriously. You can send it to whoever you want. I don't mind. However, the answer to this question may be of value to share with your listeners on your TFNN internet radio show as well. Hope that you are well, Bob. Yep, Bob, I'm fine. So I looked at Walmart. I've been following Walmart for a little while because someone that I do respect in terms of knowing the retail market pretty well had mentioned to me quite a while ago that Walmart was the only company that really could challenge Amazon, but it needed there was a lot of work to be done if that was going to happen, and they were just going to be watching what happens over the coming 6 months or so. Well, here we are. It makes an all-time high at about 110. 1, 2, 3, 4, 5 months ago. That was January, and then kaplop. It's down at 82 right now. So there's a pattern that I talk about very often. I was going to get my CD out for this, but I won't. It's the lowercase h that goes to lowercase m with a break of the support level. Now, Bob, if you had asked me yesterday, what would I be doing with Walmart if I was looking to play options? And I do mean play options because when you're testing lows that have been hit multi-times, you've formed a base of support, and that base of support breaks. Where do you have to look hard on the left side to find out where the support would be, okay? I would have said to you, if you were playing options at exactly the level that we would have looked at any time yesterday between 85, 80, say, and 85, I would have said to you, this is a perfect time to buying a call because the history over the last 6 or 8 weeks has been every time that Walmart has gone to the 85s, it's rallied very nicely to the 87s, to the 88s, and then gone close to the 200-period moving average, and bam, like a magnet that's reversed, you get the polar opposite, and it repels you back again. And that's where I would have flipped to a put. So all I can say is that the news of, there was a news, what was that? Flipkart. Okay, I'm in Walmart calls and a bit chagrined that Walmart is trading down over $3 in pre-market. Morning news mentions they're buying Flipkart and floating some debt. Should I have seen this coming? There is no way. I would have said that ugly candle of yesterday, no, of the day before, was a hint to say that I wouldn't get too carried away. I'd rather wait. I'd start a position, I'd add to the options if there was a positive close. So maybe even on the close I might have done that. There was no sign because of the lower low and then the nice close yesterday that there should be. So this is news absolutely anticipated, unanticipated. There's no way this could show up in the chart other than to say that if I look close enough, the MACD was flattening out and just about to close down, and the stochastic was very poor. But the on-balance volume had given a little bounce indication. No, Bob, I would have not dissuaded you. I definitely would have said, don't get carried away. You have to wait for the next bar to show the trend, because this has 2 bars up, 2 bars down. This has been a habit for a little while, or these 2 green bars, 1 red bar, or 2 red bars, 1 green. So you got to be ready for the mix. So Bob, all I can say is, I don't know when the calls, you didn't say when the calls are. You usually like a little bit more out the money. If the calls are for May, June. If the calls are for June, I think you'll get some money back. But this is tough. I don't know what to tell you. It would have been a small position. I would have said add to it today if today was an up day. Because that would have been the trading pattern that had been shown. It comes into the lows of 85, then spirals up 1.5, 2 points, and then it reverses. So no. Okay. But I want to look at this. Now I had a very interesting question. INFN is a stock that I've periodically looked at only because I'm fascinated by infants. I always want to know what is the symbol for, and it's Infinera. It's a optical networking company trading 1177 down 0.3. And the question I had was from Manjit, who wants to know, Basil, as a long-time subscriber, I'd like your analysis on a position that I currently have, INFN, optical networking firm. Here's my take. And then he goes to the daily, the weekly, the monthly, and his conclusion is that would appreciate your input on this, but he says all looks well here from my interpretation. Leg A is some upside resistance at 1250, a break above that, and I see resistance levels at 1594. That is the monthly. So let's get back to that in a moment. It's a nice looking stock. I want to talk about it when we get back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
So let me just say, Majid, I think you've done all the work for me. There's nothing I can say. I've got this as a peak E. I think you said you might have a peak F. No, I've got this as a peak E because there was a higher high right there. You might have missed that 1188 to 1189 back in early May. So this is what I'm looking at. Was that April? Yeah, late April. So this peak E that was made 3 days ago at 12.39, that says to me it could become a little bit of a barrier shorter term, number one. Number two is there's really good support between 1150 and 1120. That's the, I'm even going to go down to 1105, the 200-period moving average in the weekly. I think you've got yourself a really nice stock. It's ignored the whippiness of the market. It's just walked the 9-period moving average. Now it's at 2 days under the 9-period moving average. I wouldn't add to it right now, but what I would say to you is give me a yell in 2 days. Today's Thursday. No, today's Wednesday. We got Thursday. There's a chance I might not be able to make Friday. So let's go all the way to Monday. I think just give it a little chance to digest these big gains. The MACD and stochastic are a little bit weak here, and that says to me price is holding better than the technicals. I'd like to see the technicals. They can pull back a little bit, but I'd like the price not to take out the low that was made on the 1st of $11.60. A close below it, not yet. It could do that maybe Friday, but then Monday has to be moving up. So I like it. Just give it a little time to digest the gains. If you aren't adding to it, you can just hold out, because if it breaks above 1239, goes to another leg up, I still think that it's in a digestive phase right here based on the weekly chart. Everything's positive. Just needs a little bit of a breather. If you do want to add to it, I'd probably say 1163 to 1159 with the 30-cent stop. That seems to me reasonable. It's looking very good. Infinera Corporation trading $11.79. Bravo, good position play. Paul wants to know about AAXN. AAXN. Let's see. Whoa, look at this. What did he say? Hi, Basil. AAXN has been on my watch list. What the heck is AAXN? Axon Enterprise Inc. Trading, let's see. Hi, Basil. AAXN has been on my watch list since the breakout a few months ago with a new strong gap up today. I entered at the open. In your method, how are your projected profit targets been at a new all-time high? Thank you. I learn something from you every day. Be well, Paul. Hey, Paul, thank you very much. Let me show you a couple of things. This is a really good eye. That's all I can say. Wow, nice move. I need to go back. Always, I go back to the beginning of the low to when I'm starting a wave count, especially in a monthly. So I'm going back to 2009. back in the 2s, and it goes, and I'll do this quickly, it goes peak A, then underneath it, it has an A and a B. I count every peak. That's your objective in the Chapman wave. You want to be ahead of the game, not behind the game. And look, that peak C had an A, B, C underneath, and lo and behold, you get a Chapman wave overlapping wave, and that takes you to leg D and E. Very quick D and E, and then the rule of thumb in the Chapman wave with an overlapping wave is you should come back and retest the breakout level when you got the overlapping waves. Well, that was at 6.49 in December of 2011, and lo and behold, it goes to 6.70. I mean, what a nice technique, huh? And now you start a brand new move to the upside. That could be a continuation. No, that's brand new. So I'm going to go A. I would have had a question here. Is this F/B, F/A, G/B, and you can't get an H, so that has to be C. And now what we're looking at is, so this is a very interesting pattern. Oh man, I need, this is like a Technical Friday study piece. Goes to D, then it finally goes to an E. Back in 2015, it goes to the 35s, pulls back to the 13s, and now it's started a brand new move to the upside. This is A, B, this is brand new leg C. So the monthly chart, hey, man, I tell you, Paul, we've got such, here at TFNN, we have some fabulous, really fabulous listeners, subscribers, participants, hosts. We're going to have a good time here. So Exxon, Enterprise, I don't know what the news is, but it's great news, good earnings maybe. I like it. Now, here's my rule of thumb. A breakout to a new high, not on a Friday, but in the middle of the week says, now you've got to watch. You bought the opening at 50.40-ish, somewhere around there. It's trading at 54.85. Wow, good. That says I would keep that as a core position for now. I'd have to give it the initial stop. I don't know what your stop was. Let's just say you give it a 2-point stop. I don't think that's unreasonable, even though it's trading at 54.84 and you really want to raise your stop to the entry price. And I'm going to explain to you what I'm thinking here. What I'm thinking is, Dow's up 147, and that's the reason why you have to be into play. This is that kind of market. And, wow, look at that. 7.2% gain we have in our little low-price stock. I mean, the speed with which things are happening these days is just amazing. So what I'm going to say to you is, you're in this, try to keep that as a core position that you've got right now. The 120-minute chart, is that a new breakout? No, that was the low. So this is A, B, this is leg C. This is what I'm going to suggest you. Have a little patience, because at $55 right now, something spectacular has to happen on the downside for it to break today's low. So try to keep that as a core position. Within that context, I'd have a trading position. At any time in the next 2 days, if you can get a pullback, not you, if AXN can pull back to 53.10, 52.70, somewhere there, I would start another position, and that would be my trading position. That one has a really tight $1.50 stop, and if you get it and it starts to rally, and you get it before there's a new high, today's high so far is 55.49. Whatever the high is today, if it doesn't surpass that high by tomorrow, and today you manage to get it, or tomorrow you get it, the next high that's there, whatever it takes to make a new recovery high by 1 penny after you add, if you are adding, make the stop your entry price. To me, that says you got your core. That's going to be taken out at some point because gaps do get filled, but it might be a while. And your trading position, you might be able to have 2 or 3 trading positions, making 3% and then 1% and then 5%. And then all of a sudden, everything reverses and it starts coming down. And there's your core position taking in the majority of the gains because you're going to hold it And I will give you right now, I want to see what the low was. 41.16 to 41.10. Okay, so this is leg B. I'm calling it leg B for now. Oh, we've got a break. I need the break. I need the break for the daily chart. I want to do it from the beginning. And I want to just guess. This is serious stuff. I'll be right back. Basil Chapman looking at AAXN up $10 at 54.71. Oh, good on. I'll be right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of The Trader's Edge, heard here at TFNN.com.
So that's on the positive side, where we're looking at AAXN up 54 at 54.91, up 10. Now, on the negative side, if there is a pullback and it goes straight down, in other words, the levels that I was looking at, like 52.80 should be about the low that you're looking at to maybe add the trading position. If it just goes right through it, and next thing you know, it's 52.20 to 51.80, you have to wait. Don't even touch it. It's the speed with which we come down. If it reluctantly just suddenly sneaks down, that one little drop, and then it actually bounces back, you have to have your price in. So that's the way I would do it. Very negative if within 2 days you're looking at 51.80, 51.30, it says, uh-oh, single leg up, got to be careful. But so far, I like this. This looks very good. Real quickly, we've got questions. Usual question, Boeing. Boeing is trying to rally here. Oh, it isn't trying. It's rallying very nicely. I still think that Boeing is in a huge consolidation area. And I don't see these guys, although they're bouncing hugely, the power shares, aerospace and defense, ETF, PPA, trading up 57 cents to 56.66. I still see this as a digestive phase. No change there. A great question. I'll try to deal with it a little bit more. Let's see. Bobby, if you can send it to me again tomorrow to remind me about XRT. XRT is the SPY S&P retail. It's just in the trading band, and it's really going nowhere, but it is holding okay. Holding is good. I would have preferred to see it up $1.37. That would say, aha. XOP, next question came in. XOP is trading up. What is XOP again? Oh, that's that Spider oil and gas exploration. Let me see the ORH. I think that's the one that I follow a little more closely. Yeah, this is nice. This is leg brand new A, B, C. Brand new leg C should go a little higher. I would not be surprised if at 28.43 it does test the high. It was made in January, the week of the 26th at 29.53. Stay tuned for Steve Rhodes coming up. Fabulous shows coming up. You've got Steve, you've got Dave, you've got, what's today, Wednesday. You've got Tom O'Brien. A lot of learning to do here, a lot of information to give and to garner and to use. I'll be back tomorrow. Have a wonderful day. Thanks for being here. Don't forget, tonight a week, we've got Dave White's option exploration webinar. Should be fabulous. He's just done beautifully with options lately. Check it out. I'll be back tomorrow.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.